Okay, we are live. So, hey everybody, Jamie here. I'm here with Bree Beers, who I will introduce in just a minute. But wherever you are watching us from, this is live right now on my Financial Literacy for Women Business Owners Facebook group. Make sure you are in that. If you're watching it elsewhere, you might also be watching this on my YouTube channel. So, hey, if you're watching me on YouTube, make sure to subscribe. And you also might be watching this over on my business page. So wherever you're watching me, hi. This is going to be a really fun one. I'm actually really excited about this. I love having my friends on. So Bree is a preferred vendor of mine and is also a dear friend and is a CPA and is all the things really. And I'll let Bree kind of introduce herself a little bit too. But she's my tax person. So yes, I'm a CPA, but I don't do taxes. So I know enough to teach general topics on taxes. But whenever we get into any level of depth, I like to have my friends on who are actually kind of in the trenches and are paying attention to all the tax codes and all the things going on. So Bree is one of those friends. A lot of you guys already know her. So I feel like I don't even really need to introduce you, but I'm going to anyway. So Bree has her own CPA firm, Bree Beers and Associates, and is just an all-around awesome person. So if you don't know her, I've posted a bunch of her links in this. If you're watching me on Facebook, they're probably above you. If you're watching me on YouTube, they're probably below you. It's got her YouTube channel, it's got her free Facebook group, and even a link for a free consult, which we'll talk about here in a little bit if anybody's interested in that. But today we're going to talk tax planning. And I'm really excited for this topic because this is always a popular topic, right? We're going to get into, if you're like, what the heck is tax planning? We're going to talk about that as well. So I'm going to turn it over to Bree real quick to introduce herself. And then if you want to just kind of give an overview of what we're going to talk about today.
Cool. Hi, guys. Hi, ladies, everyone. I'm Bree Beers. I know a lot of you already, so I'm so excited to be here. I was so excited when Jamie was, we're actually close enough that Jamie and I were kind of talking about, she was like, what should I do? And I'm like, I'm happy to come in and talk about tax planning. She's like, yes. So I'm super excited. So I am, as Jamie said, owner of Bree Beers and Associates. We specialize in tax planning and we call it tax prep, but tax prep, you guys, and we'll talk about it a lot today. Tax preparation, meaning your tax return, is just a piece of the whole tax package. And so we're really going to kind of talk about what that means, because a lot of you guys don't know, right? You don't understand what tax planning is, what tax preparation is. So we're really going to dig into that. So after Jamie and I kind of start, so I'm going to start with a few just general year-end tax tips for you guys that are, like I said, and disclaimer, as Jamie always is like, not a lawyer. I'm not your tax advisor. So what I'm going to tell you is general information. Don't go to your CPA and be like, well, Bree said I should do this. But what I want to do is start that conversation. Okay. So like, if I want you to, as we're talking today, be like, oh, I've never talked to my CPA about that, and get that conversation going with your CPA on those things. So I'll give you a few tips. We'll talk about what tax planning is. I'll tell you a little bit about what we do. But I really like to do a lot of Q&A with you guys today. So as much time as I can leave for you guys to do some Q&A, I would love to do that. So.
All right. That's perfect. Yeah. We do want to, this community loves Q&A, and I already see people posting all their various tax questions. So importantly, we probably won't get into all the individualized tax questions, but we will answer, try to take your questions around specifically tax planning, which again, we're going to talk through what exactly that means here in a minute. So we can't give specific tax advice for specific situations, but we can give you some general guidelines based on the rules. So let's start with those quick wins then, Bree. When we're in November, right? And Bree just came out of the longest tax season in history. Yeah. So I hate this transition because literally, I mean, you guys just finally put like the stamp on the done stamp on 2019, like a couple weeks ago.
Doing 19 returns. I'm not even joking. People came out the end of October, November, like, I still need my return done. I'm like, okay. So
yeah. So hopefully you guys have all done your returns for 2019 so that we can start to focus on tax planning for 2020. And the year end is the best way to do it. A lot of people I think don't start thinking about their taxes for the current year until they're getting ready to meet with their CPA maybe next year, or they have to start gathering all that information, start finding all those receipts, et cetera, at the beginning of next year, even maybe a couple months into next year. So we want you guys to start thinking, if you're here, you're probably already starting to think about that. So that's great. We want you guys to start thinking early about tax, because the earlier you do it, the more you can do actual planning. And that's going to be really key. So let's talk about some kind of quick wins for year end. We're in November. What should people make sure that they're doing right now?
Okay, so what I want you guys to start with is I want to talk about the two, because when we talk about tax planning, you guys, and tax savings, a lot of times what we're talking about is tax deferment. Okay, we're talking about saving dollars on tax today and moving it to the future, usually when we retire, right? But I want to tell you about the two opportunities you guys have for legit tax savings, like to actually lower the amount of tax you're paying. And that's maxing out your HSAs and maxing out your Roth IRAs. So with an HSA, you can open these HSA. So that's a health savings account. And that can be opened by any of you guys who are in a high deductible health plan. So whether it's covered by the business you own, maybe your W-2 job, your spouse's job, if you're in a high deductible plan, definitely before year end, open that HSA and contribute the max. The max is, I'm going to say this wrong because I'm still in 2019, but they're like $3,900, I believe, for individual, and then double that for your family plans. And the reason, you guys, this is so important, because it is a tax deduction today, meaning it will lower your taxable income, meaning you'll pay more tax. But then, you guys, it's not a use it or lose it with the HSA. A lot of those, we think about this, and we think about flex spending plans. We're like, you have to use it by the end of the year. No. What happens with an HSA is that can actually grow. And for a lot of people, it ends up becoming part of their retirement plan. So they might have to dip into it. Maybe you have a big year, a year where you have, last year, me, my husband, and my daughter were all in the hospital for one reason or another. So we definitely met our like out of pocket deductible, had to dip into that HSA. But if you don't, you guys, it can just keep rolling over, and then it's invested in something that is making money on interest. All right. It might not be much right now, but it's making something. And when you do take it out, whether it's next year or during retirement, because you aren't dipping into it, all of that money is tax-free when you take it out, as long as you use it on medical expenses. And as you guys know, when you're retired, your medical expenses tend to be higher. So that is actually a tax saving strategy versus a tax deferment strategy. And the other one I want to talk to you guys about is that Roth IRA. Okay, I get so many people who are like, but I'm in the highest tax bracket. I don't know if I want to pay tax now, all those things. What I like to tell people, so let's start with what a Roth IRA is. A Roth IRA is you putting your post-tax dollars into a retirement or savings account. All right. And we'll talk about, there's so many benefits to this. But what happens, you guys, is you put the money post-tax, right? So you just take money out of your checking account, your savings account, something like that. And it goes into this Roth IRA. So it's not a taxable event because it's already money you've been taxed on. All right. But once it's in that Roth IRA, you guys, again, it's going to grow. That interest is going to grow tax-free. Whenever you take that money out, whether it's 5 years from now or 35 years from now, all of that money, the principal and the interest that you take out, is tax-free. All right. So that is, again, it's not a tax deferment strategy. It's a legit tax saving strategy. And so I know a lot of people, I was on a group call last night with a financially, they were a financially independent group, and they actually use their Roth IRAs as emergency funds, because they're unlike when you're contributing to your 401k, and those ones you have to wait until you're older to take out. With a Roth, you just have to have the Roth open for 5 years before you can take your principal or your contributions back out tax-free. All right. So many positive reasons to contribute to that Roth IRA. I always get so much pushback from people like, but I'm in the highest tax bracket. I don't want to pay tax. I want those tax deductions. Well, chances are, if you're in the highest tax bracket, you're not benefiting from a traditional IRA anyway, because those have phase out limits, just like the Roth contributions do. So there are some backdoors that they're called Roth backdoor conversions that you can do. We're not going to get into all the craziness, but the point is, I believe no matter what questions you're going to, and I know you're going to come with me, but I have a 401k, but the only time you should be funding something before a Roth IRA, I believe, is when you have a match at your employer, because the match is free money. Yeah. All right. So there's kind of a hierarchy there. Go ahead, Jamie.
Yeah, no. So that's really great. I think retirement planning is a whole topic that I'm probably going to do a live at some point on just the retirement planning, because I think that is a huge. In some cases, it's tax deferment, and in a lot of cases, it's actual tax savings that you can get, and there are differences in different plans. So yes, a Roth is a great thing that it may not save you taxes today, but it could save you big later on. There are phase out limits though, right, for your Roth IRAs?
There are. I think it was at least in 2019, it was like $132,000. But like I said, what you do, there's a backdoor. You contribute to your traditional IRA and then you can just convert it to a Roth. Why that exists, that's it does get rid of the phase out limits if they're going to allow that. But I think what happens is people don't know it exists, right? They don't know that strategy is there. Yeah. And so they don't take advantage of it. And so now know it's there, use it.
Yeah. And I also want to mention too, since there are a lot of people in here who are self-employed, who are, business owners, obviously, you also have kind of your SEP IRAs, your solo 401ks. There are a lot of options for you. And some of those contribution limits can be pretty high and even higher than what you could put into a Roth. So that's another avenue for those of you. If you don't have that, you probably want to meet with an advisor and talk about what makes sense for you in your situation. And that is something, it depends on the type, right? Because some of them you have to have opened by the end of the year and contributed. Yes. A lot of times you have a little longer to contribute, but you probably need to have them open by the end of the year in a lot of cases, not all cases. Depends on the type
usually of account. You want to have them open by the end of the year. I believe the 401k is the only one you have to fund, the traditional 401k. Everything else you have until you file your tax return to actually fund it. But you usually want them open. But the great thing about what Jamie just touched on, and that was the next thing I was going to give you guys, is that this Roth IRA is separate than any of those SEPs, those simples. If you have a 401k, a solo 401k, you can do both. Okay, you can do both. So again, if you're looking for, like I said, the Roth you want to do because eventually it's free money. But if you're looking for this year's tax savings, then max out your retirement. So that was my last tip, is max out those retirement accounts, whether they're through your employer, if you're W-2 employed, or through your business as self-employed.
And if you guys don't have like a self-employed, if you don't have a retirement plan at this point in time, okay, we are revamping our entire preferred vendors list. I've spent that's basically been my last 2 weeks, is talking to a million different people to find the right people and to vet people for this preferred vendors list. So Bree is already on it. She's been on it for a long time, but we are revamping it to have even more choices because this group has grown so fast. We haven't traditionally had financial planners on the list. We will now. So I'm really excited for some of the financial planners we have coming on that we can, if you need to set up a new retirement account, check back next week. Okay, check back next week. We're going to be putting our new preferred vendors list everywhere and having a big celebration about it. But that will be people that you can contact to say, hey, I need some help. And they will be able to help you with this retirement planning piece and things like that, in conjugation with a CPA as well, right? Looking at it from both sides of things to make sure you're getting your tax savings and you're doing things that are the right things to be doing from a tax perspective and also from a financial planning perspective for you personally. So I think really everybody should have both of those things in their life. I think those are, I know I'm speaking your language.
Yes. We have a whole training on having your A team. As a business owner, you should have an advisor, a financial advisor, an accountant, that's me, and your attorney. Yes. You can submit there. And so, yes. And making sure, real quick, bonus tip, that your financial advisor and your CPA and whoever, or just your accountant, anytime you guys work with these people, there's a reason they offer free consults to make sure you guys get along, like your personalities mesh, and to make sure they can do what it is you want them to do for your business. So use these free consultations as an interview. Make sure that you guys match personality wise, and make sure that they are able to do the things you want them to do for your business. And then make sure that your financial advisor and CPA, they know each other, because you are going to have such an easier time if they're connected and they have a good relationship. So
yes. And that is something we're really trying to foster too on the preferred vendors list, is that there will be synergies between people. We're getting everybody to know each other. So I love the idea of an A team, because those are all topics that we're going to have covered on the preferred vendors list. So if you're missing on any of those things, we've got you. Give us another week to finish and finalize everything, and then that's going to be coming out. So I'm really excited about that. Okay, so real quick, I'm going to get some questions. I'm going to put up some questions. So Gloria had a question about the thing you touched on about using a Roth as an emergency fund.
Yes. So this is fun fact. Like, it's one of those things that existed, but until someone actually tells you and says it out loud, you're like, never thought about it like that. So the early penalty, you guys, so the rules on a Roth are you have to have it established, the account established for 5 years before you can start taking out the principal. Okay, the principal meaning your contributions. Okay, and so any interest that your Roth makes, you can't take that out. If you take that out, there will be a penalty. That'll be the 10% penalty that you take, but your contributions you can take out anytime after you've had that account for 5 years. So again, we don't condone taking your retirement out, but especially COVID times, you got to do what you got to do. And so I learned that from the group last night, as they've actually set up their Roth to be an emergency fund where they're making money, and hopefully it's their retirement plan, but they know they can actually touch that money if they need to before they're 59 and a half.
And I think that's one of the things that does keep people from contributing to retirement sometimes, is this feeling of it just being this like thing that goes off into the abyss, right? Where you're like, you might be in your 30s and you're like, man, I want to contribute, but what if I need it? Right. So I think that's a good option there to know. It's not necessarily stuck there forever. Now we do want, that is best practice. You want to put that money away and you do want to kind of put it siloed, but sometimes there are emergency situations where you may need to. You don't want to make a habit of it, but you may need to. And this has been one of those situations where a lot of people have done that actually for COVID. So some of you guys may not realize you might be taking out debt or something like that right now because you've had a hard time during COVID. Your business has been hit, right? You may have a Roth right now that you have had for 5 or more years that you could take some of those contributions back out. And again, work with a tax advisor, make sure that you're doing everything on the up and up and that you're not going to get hit by it. But that might be an option for those of you who haven't thought of that and already have one of those. Okay. So I can't tell if you're posting on a question and you want us to see your name. If you're probably in the Facebook group, make sure there should be a link up above where it says to give StreamYard your permission to see your name. You have to click a link and then it just allows us to be able to know who it is. But Facebook user has the question of, can you do an HSA if you have an LLC?
Yeah. So the HSA is on the individual side. Okay. It has nothing to do with your business or your LLC. But the only requirement is that you are covered by a high deductible health plan. So if you're if you're getting it out on the market, right, like because you are self-employed and that's where you get your health insurance, as long as it's a high deductible plan, you can contribute to that HSA. Go ahead, Jamie.
Oh no, I was just gonna say, I think sometimes where it gets confusing, right, with business owners is it deductible on the business side or is it deductible on the personal side? Yes. The HSA is on the personal side. It's not a deduction for your business, but it's still a deduction, right? Yes. So it's you don't run that through your P&L. That's not something your business would pay. That's something you would pay personally, but you still get a personal tax deduction for that.
Yes. Great clarification. That's always so hard when you're in self-employed, you guys. Is like, what's business, what's personal? And
yeah, exactly. Let's see. Okay, I'm just looking for one specifically on what we just talked about, and then we can go back as we have time for some of the other questions. Sure. Love the A team. Yes, so I'm going to put that on with I've talked to a couple of the new financial planners that we have coming on the preferred vendors list. That would be a great topic for them as well to get more into the nitty gritty on retirement, because again, we're not financial planners, but we are CPAs, so we can give you one side of things. But it's also good to have that other flip side. Let's see.
And as she's looking, you guys, that's just why it's so important to make sure your CPA and your financial advisor connect, because they have different goals for you, right? Your CPA is likely like, how much tax can we save you this year? While your financial advisor is like, how much can we make you, right? And sometimes those goals conflict. So you need to have them those two people connected so that, and ultimately it's your decision. What is your main goal? And making sure that both your financial advisor and your CPA know what that is.
Yes. I love that. So somebody was reiterating what that kind of team is that you mentioned, the people that you need to have, which I think is a great point. Yeah.
I'm pretty sure I should coin this because I didn't steal this or I didn't borrow this from anyone, but I call it my A team, and that's your accountant,
Yep.
Your advisor, meaning your
and let's real quick go into accountant, because I think that even that term can be tough for what that means specifically, right?
So in this instance, you guys, we're talking a tax accountant. Okay, you might have you might have a bookkeeper, but you need at least a tax accountant who's there helping you do your tax planning. And I promise we will talk about like how tax planning is different than tax prep in a minute, and how you find a good tax planner. But an accountant, and for different people, an accountant's going to look different, because some of you want full service bookkeeping. So your accountant will include a bookkeeper. For some of you, you do your own bookkeeping, right? And so you just need the accountant at the end of the year. But make sure, and it doesn't have to be a CPA per se, you guys. I know plenty of enrolled agents and non-CPAs who know their crap, and they do a great job. But tax accountants are also a dime a dozen. Okay, so you need to make sure you're vetting them. All right, make sure you're vetting them. So that's your accountant is your first one. Your financial advisor is your second. And same thing, you guys. Not only are financial advisors everywhere, but they have different goals. There's a lot of financial advisors out there who are traditional. They're gonna be very conservative, and then there's ones that are on the hedge funds and REITs and all these things. And so you need to make sure these aren't things you're expected to know going into your meeting, but you want to ask, like, I'm very conservative in my savings. Is that what you guys do here at your firm? Or I want to go crazy, like make money, lose money. I'm all in, but make sure your financial advisor is on that same page in terms of your investing style. And the last one is the attorney. I have an attorney. I don't work, like, she's not someone that I work with every year, but she's there if I need her, right? If I'm looking to acquire a new business, if I'm looking to change from if you're a sole prop and you're ready to go to an LLC, having an accountant that you can advise, like, why do I want to do that? Is this good? Am I doing everything? Is somebody, and you guys, I love it, but LegalZoom is not an accountant. When you're a business
or
owner,
an attorney.
That's what I meant. Sorry, an attorney. And if you're running a business, okay, tough love real quick. If you're owning a business, that means you're playing in the big pond. Okay, so you gotta have real people doing this stuff for you. All right, real accountants, real advisors, real attorneys.
And I think that is something that we can kind of get by for a long time until something goes wrong. I think that's true with tax accountants. If you don't have one, you can DIY it and not know what you don't know, right? Yeah. Until you get a letter from the IRS. Same thing with attorneys. You can DIY whatever you want to until you get into a legal situation, and then you wish that you had gone more formalized. So for those of you guys who are like, "Ooh, I need an attorney, but attorneys are so expensive." Oh my gosh, I like want to tease this out a little bit. I actually talked to our attorney. Some of you guys know her, Amy Tepper. She's on our preferred vendors list yesterday about some really cool potential things that we're cooking up for you guys. And really, like, I think there's going to be a really neat opportunity. We're hopefully going to be rolling it out before too long. So stay tuned. But for those of you guys who are like, I need a lawyer, but I can't afford a lawyer, or I can't afford, like paying $300 an hour for a lawyer for everything. Y'all, we have like some really cool ideas that Amy came up with for this group specifically. So that is so awesome. Super excited about it, but more to come on that. Anyway, so going back to, I think those are all great. And then I think the added cherry on the top is if you have a bookkeeper, right? So if you don't have a full service accountant, if you add a bookkeeper to that, that can just help you from a compliance standpoint to kind of save you time and make sure that things are ready for your CPA when you turn everything over. Okay, let's see. Yay, love it. Lots of good feedback. Okay. So real quick, I'm going to look through these comments, but I do want, Bree, I want you to talk about a little bit, like, tell us just tax planning. What is that? And how does it differ from just general tax prep? Because I think a lot of people have somebody who prepares their taxes, but maybe isn't doing the planning. And importantly, if they have not specifically said they probably are not, right? Yeah. So that's something to know.
Yes. Let's talk about that. So you guys, tax preparation is reactive, right? It's essentially a reconciliation of what happened last year, right? With the exception of, am I feeding back? I feel like I'm feeding back, Jamie. I can hear myself.
I hear you fine.
Okay, sorry. I just want to make sure. Okay. Where was I? reactionary, right? So there's very little you can do to fix your 2020 picture after 2020 is over, right? You can max out some retirements, there's some late things, but by doing tax planning, you guys, is proactive. It's looking at your taxes in the year that's happening. So right now, yep, I will talk about that, Stacy. It's looking at your tax picture right now and saying, okay, what can we do? Are we happy with where we are? Right. So basic tax planning, you guys, is looking at your business income, all of your income, your business income, your W-2 income, all that exists, right? And then looking at how much you've paid in or haven't paid in, and then saying, okay, this is what we're looking at owing when you do your tax return, right? So in essence, if we do it in November, December, first thought is you're more likely to have the money the year that you made it, right? As opposed to 4 to 10 months later, right? So if you made the money this year and you're able to know how much to pay and make that payment this year, it helps you're more likely to have the right cash flow to do it. Okay. So that's one. The second one is once you know your tax bill, even if you're not going to pay it till next year, right? But once you know how much it is, you know what cash is available for all the other things you want to do, right? If you want to expand your business, if there was a piece of equipment you wanted to buy, if you wanted to hire someone, you now know what cash is left after your tax liability is taken care of. And we also notice that with people who do year-end tax planning, they're a lot less likely to procrastinate at year-end because they already know. They know their bill. They know because the people procrastinate because they're just like, I know I'm going to have to write a check. I just don't know how much it's going to be. And so I'm just going to hold off doing it and put it off as long as possible. But if you did some tax planning and you already know what that bill or that is going to look like, then when tax time comes around, you're good. The only thing you have to do is collect a few documents and you're good to go. Okay. So that's some basic tax planning. And so Stacy says, is there a difference between a tax planner and a tax strategist? So so first of all, I want to go back to, because a lot of people, they get their estimated tax payments from their tax preparer and they think that's tax planning. Okay, that is not tax planning. What that is, those estimated payments, you guys, are based on your prior year's tax return. And they're saying, assuming you make all the same amount of money that you did last year and everything happens, sure, this is how much you need to pay in this year. And the reason they're doing that is because it's called a safe harbor. And they're making sure that as long as you pay in the same amount you paid in last year, even if you quadruple your income this year, you're not going to get an underpayment penalty. So that's what those estimated calculations are. They are unless your CPA has told you otherwise, that he is going in and calculating this every quarter based on your financials, which if he's not accessing your financials, they're not they're not current year. They're based on last year's, and they're helpful, right? And if you're in a place where you're like, yep, my income's just the same, these are probably good, that's fine. But most self-employed people, you guys, our income goes up and down, right? It fluctuates. And so having someone who sits with you quarterly and says, okay, this is how much you've made, this is where you're at, this is what your estimated tax payment actually needs to be. And that way, not only are you making sure you're paying in enough so you don't have this huge bill at the end, but it also helps you from overpaying on a bad year, okay? Because the rule is you pay in 100 or 110% of last year's or 90% of this year's. So tell me, if you made half as much as last year, do you want to pay in all that extra tax and then have to wait till April to get it back? No. So sit down with some tax planning and make sure you're not over or underpaying. So that's some basic tax planning. I just want to make sure that you guys understand that those estimated tax payments that you get from your CPA, because I have clients coming back and they're like, well, I already did tax planning. You gave me my estimates. I'm like, no. That's not tax planning. And so we go into explaining what it is. So Stacey says, is there a difference between a tax planner and a tax strategist? They're just words: tax planner, tax strategist, tax advisor. What you need to go in with, you guys, is when you're vetting, when you're interviewing these CPAs or these accountants, is tell them your goals. Tell them what you want. Tell them, they should be asking you, do you have a business? Where does your income come from? They should be asking these probing questions to figure out if you're a good fit for them. Okay. And then ask them, be like, do you just do tax prep or do you also plan? If they're like, yeah, I also plan, ask them what that looks like. Okay. Because some people, they do year-end tax planning and that's perfect. And for a lot of you guys, that's going to be enough. Okay. But if you want more than that, if you want to look at your financials quarterly and you want that deeper dive, then you're going to want to make sure that your tax advisor provides that service.
Yeah. I think that's a really good point you make, is that some people use the same words to mean different things. So I think the key is, regardless of what they're saying, what they're calling it, what is it exactly? Is it, we're going to help you plan to make sure that you don't over or underpay your taxes too much? That's kind of basic tax planning for the current year, right? For year end. And or are they going to strategize, meaning they're going to look and say, well, actually, if we set you up as a different entity type, or if we split you into 2 different entity types and did these things, or if we, I mean, there's a whole host of, different tax strategy that you can also apply, which is kind of like the next level. You're going to pay more for that. I guarantee you, even if you think you are, you're probably not really getting true tax strategy if you're just paying for tax prep, right?
Yeah.
If you're paying $400 to get a tax return done, that does not include tax strategy. You're going to pay for tax strategy, right? Like that. But the point is, okay, if you pay, for tax strategy 1 year, and that saves you more money this year and into the future, like, why the heck would you not do it? And so many people don't do it because they're afraid of, like, it can be costly. A good tax strategist should give you some idea if there's an opening. It won't be like, oh, we were going to pay them a whole bunch and they can't find anything, right?
No, yeah. And I'll kind of tell you how we operate, you guys. So we have, and Jamie said she had the link somewhere. So when you go to our page, you'll see, yes, Stacey, we're going to talk about what I do right now. So we have our
segue, Stacey.
Good job. So we have basic tax planning. And when you go to our page, you'll see 4 different packages that have a price on it. And that's going to provide that basic tax planning that we talked about, right? Making sure you've paid in enough this year, seeing what your actual bill is going to look like. And during that, we're going to look at the main credits and deductions and make sure you're taking them all, right? Make sure you're doing everything you need to do to comply with taking those things. And then we have our advanced tax strategy. And this is where I have fun. Okay. So I recently got my certified tax coaching I almost said certification, my CTC certification, meaning so I'm a certified tax coach, you guys, which is what gives me the knowledge and the expertise to actually sit down and help you with those advanced tax strategies that Jamie's talking about. So do we change entities? Do we split your entity into 2? And, do we, those are the big ones that always come up, but do we hire your kids? Do we hire other family members? All these things. And these plans, our lowest plan is $1,500, guys, but that and these are custom made, but that $1,500 plan I did last week saved my clients $11,000 this year and every year going forward. Okay. So the price tag is like there, but the value is crazy. The most expensive one we did, I worked with another another accountant with it. It was just under a $50,000 price tag to us, but we saved them $237,000 in taxes that year. Okay. So they range, right? And we custom build those packages. So we sit down, and if you're not sitting down, so our process, you schedule a call with us and you get a questionnaire to complete. Questionnaire takes a couple, 15, 20 minutes. And that's our key into getting to know you, right? What are your goals? What do you want to see happen with this? Are you growing? All those things. And then we build your custom tax package. We sit down. Well, we don't sit down with you. We have a Zoom with you. Yes, it is confusing, right? So we sit down with you and we say, okay, here's some strategies that we think will save you $50,000. Great, right? Well, now, oh my God, y'all are distracting me, but thank you.
I'm just putting them up. You don't know what to address.
So we'll sit there, we'll say, okay, we have these strategies. If we do some income shifting, we hire some people, this, that, and the other, you guys, we can save you $50,000 this year and probably $30,000 every year going forward. What this is going to cost, and that price is going to depend on what we came up with, right? Do we have to create a new business entity? Do we have what's involved? And we take care of all that for you. All right. We work with you to make sure you cross your T's, dot your I's, get all that done. For 2020, there is still time to implement advanced tax strategy. What we're finding is a lot of people are coming in, we're doing these, we're giving, and then they're like, it seems like a lot to do in 6 weeks, but we've planted the seed for next year. So they're ready to jump on the bandwagon for next year. And that's totally fine. There's no meeting with that. It's not a waste of our time. We want to just make sure you guys know what's out there, and so again, tax planning, tax strategy, all the things. What did she say? Tax planner, tax strategist, financial advisor. It's also confusing. So, but it's knowing what you need. Some of you might be in a place where you don't need a tax strategist, but I highly, highly recommend you schedule a free consultation to see if that's true. Because you can assume that, because that's what you guys do, right? Oh, I don't make enough. Oh, my business is simple. There's no way I could be saving money. You don't know that. You don't know that.
I'll say this. I'm actually going to be, and we need to schedule this, Bree, because now I need it. Well, before your calendar gets all like crazy, I have told Bree she needs to do one of these for me. So, because I need to sit down and look, even as a CPA, I am not certified in advanced tax strategy. Yeah. Right. So I can do my own taxes. I know, some of the ins and outs, some of the different ways to save money. But when it comes to like this advanced strategy that Bree is talking about, it's not even something that I have done myself. And so I'm excited to sit down with Bree and see what we can do and see what kind of money we can save.
I know all the moving pieces you have. I'm pretty sure you have a lot of opportunity to save some money.
That's the hope. That's the hope. So let's see. So let me just look through the questions. I know there were some more specific questions. We are running out of time, so I don't want to keep Bree too long. But again, if you do have specific questions, I've dropped that consult link that you can sit down and talk to Bree. So you can get your questions answered as well. Let's see. And some of these do really, so we can talk about that as well.
Yeah. So 529s, you guys, they are a great tool, to save for your kids' college. And they are usually a tax deduction in the year you make them on the state level only, right? So in Colorado, I think our tax rate is 4.65%. So if I donate $100 or I contribute $100, I'm going to save $4.56 or 65 cents. Okay. But similar to those other things, as long as they're growing, as long as you use the fund for educational purposes, you get to take it all out tax-free. So all the interest.
It's kind of like a Roth that way, right? Like it's sort of like a Roth, but for a specific purpose. And you have higher limits as well, I think, as far as contributions too. Yeah, some states, like the state of Tennessee, we don't actually, like some states you have to buy your state's plan to get a deduction. And some states don't have deductions at all. So state of Tennessee, I don't believe, at least when I first signed up my kids, they don't give you a state tax deduction for a 529. Some states do. So you probably want to know that. And again, that's something your tax advisor can help you with as well when you're setting it up. Let's see. And
another way.
Okay, this is good. I like this question.
State specific. We're in Washington. So there are things that are state specific, but you just need a CPA that works with your state. It doesn't have to be someone in your state. We work with clients across the country. The only two states we're not taking new clients on right at the moment is California and New York. I'm looking to hire someone that specializes in those two states just because they're crazy. But every other state, I'm pretty sure we did a little audit, not an audit, but a review. And we have at least one client in every other one of the states. Well, we do have clients in those states. We're just not taking on new clients, but we have clients in every state. So we know the state specific rules, and there are going to be some tax planning strategies that might be specific to your state that add an additional bonus on top of the federal benefits of tax planning.
And that is the question too that you want to ask, because it is getting to be, we are more of a virtual world. So I think that the idea that you need a CPA in your state is not really true anymore. Your CPA should have the ability to research and look up what the rules are for your state and help you implement them. Again, New York and California have more specific things. So some CPAs may decide that they're not going to work with those because those may need more of a specialist. But for the most part, we live in this virtual world now where the more important thing is finding someone who is qualified, who understands maybe your industry as well, I think is important too, right? Because a lot of people only serve service people. So if you're a product business, probably doesn't make sense for you to work with them. So those are questions to ask. And if they are used to working virtually, as long as you're comfortable working virtually, I think that's kind of the way to the future. No, who really wants to like meet with their CPA in person anyway? Like, I mean, Bree is different. Like you can go out and have a beer with Bree, but or truly.
I think they're all truly or wine, but it's
or a lot of wine.
all the way. And I see a lot of people saying, darn, I'm in California. Oh no, I'm in California. So for you guys, the only piece I'm missing right now is the actual tax return. That's the compliance part. But if you want to do a year-end tax strategy, we can do that. That we have the capability of doing. All the other services, I just am not at the point where I know that we can do your tax return for those states with confidence, because the rules are just different. So I am looking to hire someone. So I would definitely tell you, California people, if tax planning and tax strategizing is what you're interested in, schedule a consult with me, because who knows, by the time we talk, I might have hired someone. But at the very moment, we're just not taking on tax preparation clients in those 2 states. So
that's awesome. I love these comments, by the way.
Oh my gosh, yes, who are you? I love you.
Here, y'all. Some of y'all who've been around, you know Bree. You know Bree. Okay, well, I'm gonna let Bree go. We still have more things. Okay, hang on. So somebody was asking for the consult link, and Dana's got us. Thanks, Dana.
Thanks, Dana.
So it was really great to have you. It's always fun. You know, Bree's always up for it. Like the day before, I'm like, hey, you want to come live with me? And she's like, yeah, let's do it. It'll be fun. She'll be back.
Yeah, be like, hey, where's Bree? And then Jamie will come get me. Like,
yeah, exactly. If y'all want her back, we'll have her back. I'm sure soon. But anyway, y'all make sure to reach out to her because she is awesome. And she's a friend and a preferred vendor. And like I said, make sure that you're watching also for our preferred vendor list. So that will be coming out next week. I'm super jazzed about it. There's a lot of great people on it. You can fill up your A team with the people on the list. And it's going to be awesome. So thanks, guys. And we hope you have a great rest of your day. Bye.